Hey, friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. You guys know that I created my channel to help as many people as possible become independent and profitable traders. So if that's something that you've been looking to do, you found yourself in the right place at the right time. Now, in today's quick video, we're going to be doing a trade breakdown. And if you're new to this channel, this is where I review all of the trades that I take and also the trades that I share with the students that I am mentoring. Now, if you've been struggling on your journey and you feel like you need a mentor, you've seen some of my videos and you like the way I teach, I do recommend that you register for personal mentorship. It is optional, but the information is down below in my description box. So in today's trade breakdown video, we're going to be talking about this USDCAD trade that was posted on May 19th around 7:18 p.m. And I recommended this trade for a market execution sell or a sell limit between these numbers. I also recommended a stop loss of 30 to 40 pips from the entry. And the reason why that may seem high is because this trade was taking on the daily time frame. And a tip that I like to give my mentees is that depending on which time frame you're using, that is going to influence how many pips you should set your take profit and stop loss. Because if you're looking at the market on a daily time frame, you should expect longer and bigger moves, and the trades may take longer to actually complete their movement and play out. But you can always adjust your stop loss to anything that you want based on your trading style and your trading plan. I also gave them a few different TPs that they can take anywhere from 40 to about, it looks about like 100 pips. And we're going to go ahead and see how this trade actually played out on TradingView. So the site that I use is tradingview.com for all of my charting. It does give me all the features that I need, and it is pretty simple. You guys can register or just really make sure you thoroughly explore it. So this was my entry candle here. This was the May 19th candle. Um, I took my indicators off. But what I was looking at when the market was at this point was that it had already hit a couple of resistance. Oops, let's go back. It had already hit a couple of resistance bumps. And resistance in the market is when price is having a hard time getting higher um, than it previously was before. So that was the first thing that I noticed, thinking that the market was going to continue to go down. This was my actual entry candle. And I also noticed that my stochastic was facing down and the orange line was above the blue. Now, for me, those are pretty strong signals that the market is going to sell. Remember, we started somewhere here, and the market did drop a little bit, but it didn't go down too far. Now, you guys saw in the initial trade idea, I gave them two potential entry points, which was 13618, which is this first line, and the highest entry point was 136402. So we can see that the market actually did hit this point. If you would have entered here, the trade would have triggered. You would have gotten up to here. You could have closed in profit, but that wasn't a lot of pips. But as we can see, the market retraced and it went up right to our second potential or the highest entry point, which was 13640. And then it actually, ironically, came back down to our first entry point. So that would have been a good 20 pip trade to secure some profits. But I expected the market to continue to drop, but as we can see, that's not what happened. Structure was broken here by this large green candle. And a break of structure just means that the market is consolidating in a certain area. And then it kind of chooses a side by showing more momentum in that area. So structure was broken here, letting me know that the market was going to continue to buy. And buy it did. So for this trade, it actually hit stop loss for me. I was not willing to have more than, because it actually went up. It actually went up more than 100 pips. And I just wasn't willing to risk that much capital of my account. So I kind of just let this trade go. However, it is a new week. I am in for a new sell. As we can see, the market already rejected off of the previous sell limit. And I am expecting it to come down to at least here. So that'd be a good 40 to 50 pip trade just catching the market. What I initially thought was going to happen, it just really took some time. And I do believe it was some news last week that caused the market to actually spike up here. I believe this was a news candle, 8 a.m. But yeah, that's really what happened in this trade, guys. It hit stop loss. I am completely comfortable with the fact that I will not win every trade as long as my win to loss ratio is good. I think I found a solid strategy. My discipline is great. So when you lose a trade, you just got to remember to one, hopefully you use proper risk management, but just remember to move on to the next trade. Don't be attached to it. Don't get too emotional because that doesn't really help you. And the market is not personally attacking you. You just won't win every trade. So I really hope that this video was helpful. Again, if you guys have any questions, you can leave them down below in the comment box. And let me know what is your favorite pair to trade or if you hit stop loss in the month of May. But that's really all I have for you guys today. Until next time.